Over here, and I'm actually doing my first YouTube video in terms of Forex. So I'm starting a bit small. The channel is gonna grow, but now we're gonna be more finance based and a little bit of entertainment in this channel. But thank you guys for watching this video, and thank you for subscribing as well and liking. If you haven't, please do so. So the recommended broker that I trade with is currently RCG Markets. The link will be in the description in terms of registering, right? So as I said and as I mentioned, that we will be doing a video on weekly breakdown. So today is Monday and it's the 26th. So the month is about to end of February. Next week we have our first NFP, right? So let's get straight into it. So you want to go into trading view. This is where you analyze all your pairs and all your if you want to like analyze in general anything forex trading related, this is the chart that I use. I open my charts on trading view and then I open metaphor in a trade, right? So looking at this week, I've already because I'm a price action trader, right? I'm a price action trader, so I've already like set up my trend lines and everything like that. So firstly, what we're looking for right here, let me just remove this all over and start again. So what we're looking for right here, we first look at, we pick one time frame, which is like I'm always looking at the 4-hour and 1-hour time frame, but I mostly use the 1-hour time frame in terms of entry points, right? I'll show you just now, but mostly, especially on currencies, I only trade with currencies on the 4-hour time frame. So what I do with price action is that you only draw your trend line at the tip of the wicks, right? You never want to draw your trend line in through the candles or like through the candles. Basically your trend line should always be below the tips of a candlestick, right? For both the bullish and bearish trend, right? So as you can see right here, the market is moving towards upward direction, so it's an uptrend. So what we want to do is highlight our stops, right? Our touches, I mean, sorry about that, our touches. You can see that we have our first touch right here. Let me just make it smaller. We have our first touch right here, we have our second touch right here, and then we have we don't have a third touch. So with price action, we always wait for the third touch and then we enter on the third touch, right? So now we only have 2 touches and we're currently waiting on the third one, right? So forex is simple as that. Maybe it'll be here or maybe it'll be somewhere here, it'll depend, but as for now, we're not trading, we're leaving it as it is, right? So when I told you guys that like I only look for entries on the 1-hour candlestick, this is what I meant. So regardless of the 4-hour candlestick movement not having a third touch, I'm going to quickly confirm that with the 1-hour time frame, right? It should also not give me like third touches, but sometimes it happens that it does, and you can enter on the 1-hour time frame, and by the time the 4-hour time frame touches its third touch on the trend line, you would be like in massive profits already, okay? So on the 1-hour time frame, we can see that we still have, yet even though like from this zone right here, it looks like a bit of like a consolidation, we don't have like really much movement right there. It could be because it's Monday, and Monday is really hectic day, so that's why I don't normally trade on Monday, but if I see opportunities I trade. But we can see that in the most recent market moves from here until the current price of the market, right, we can see that the market is sort of going to an uptrend, right? So we can still connect our what you call our trend line right there. So remember, the trend line should always be below the candle wicks, right? So hopefully you know what a wicks is by now, right? So mine is cutting through right now, and I said it shouldn't, so there I fixed it. And if you can see right now, if we were early enough, maybe I think this is last week's trades, or maybe during the day, if we were early enough on the 1-hour time frame, we had 1, we had 2, let me quickly just circle them out for you. We had 1, we had 2, then we had 3, and this is what I meant. On the third touch, you basically enter the market with your you enter buys on the market, because the third touch on the bullish trend line basically indicates that you can basically continue setting your buys, right? And then the risk to reward ratio that I always use is 1 to 3, right? So what I mean by risk to reward ratio, for those of you guys who don't know, risk to reward ratio is basically this: is where you set your long position, right, in trading view, and you see the risk to reward ratio, it's at 1.18 now. So if you take down your stop loss, you'd see that your risk to reward ratios, as mine is at 3 right now, so I basically just leave it there. So meaning that, like, you want to take less of a loss and more of a win. So you want to lose 1% and win 3%, right? So that's basically risk to reward ratio, guys. So on the 1 hour time frame, we could already see our target was already like reached. We are fine. So that's why now waiting on the 4 hour candlesticks to perform for us, right? We're waiting for that third touch on the candlestick, on the 4th hour candlesticks, right, which is this one right here, the bigger one right here, the overall movement. As long as you know that you should never ever trade against the overall movement, right? So yeah, guys, the next pair, we're only going to be focusing on 3 pairs right now, so it's going to be 3 pairs per week. So the next pair, guys, we're going to be simply going to, let me go to AUD USD, because the first one was USD JPY. So now we are in AUD USD, right? So basically, let me do this, let me just switch off, because this is my analysis, so I don't want to take it off. But anyway, because I already analyzed, I can go through it with you guys. So we have 1 2 on the 4 hour time frame, right? We have 1 2, and then on the third touch, when we were supposed to touch, it eventually broke. So in cases like this, what normally happens is that, let me just remove this, what normally happens is that if the market on the third touch doesn't touch the candlestick as a wick, but instead breaks it, then that means the market is telling us that, you know what, I am no more going to be buying, I am now taking sells. So since we have one, let me draw them out. Since we have one, okay, we have one, and then we have two. So we have 2 very close ones right there, and we were supposed to have our third one, but eventually it broke. So as I mentioned, that if the market breaks on the third touch line, only on the third touch line, once it breaks, it indicates that it's changing what direction, right? Now in most cases it does this, and then in other cases it'll actually tell us it'll actually head for continue buying, because you know why, because it will be supporting this zone right here. So it will be respecting our support right here, and we'll actually have like a double top, right? So this, it has 2 options and as to where it could move, right? But for me, right, as you know, Forex is 100% not accurate, but like if you use your own strategy and it works out for you, then you can work out on it, right? So as I mentioned, like, guys, it just broke the trend line right here, so it means that it's heading for a downtrend. So I initially took a sell right here, because the market for me is telling me that it's heading downwards. And again, what supported my analysis, right, is that overall, like from the current market, like I analyzed there, from the current market price right here, from there until here, you can basically see that the market is heading downwards, right? So it has one touch, and then it has the second one, and it's basically looking for that third one in order for us to go down. Another thing that I want you guys to notice is that if AUD USD is selling, if USD is selling, right, then it means if it's on the left, it should buy, right? For example, here USD JPY, the first one we analyzed, USD is buying, so there is no way in other currency that is against it, it should sell, right? So that's why in AUD USD it's selling, right? Sorry, there's no way in another currency it should buy, sorry, not sell. So that's why in AUD USD we are buying, right? I mean, we are selling instead of buying, the overall movement, right? But even though the short-term buys right here, we just confirmed that actually the overall movement is a sell. So what you want to do in terms of forex trading in general, never trade against the market's overall direction, always trade the overall direction. You can enter short-term positions in terms of, like, you see the market is overall going on a buy, but just like this trade right here, this pair right here, we could overall we could see it's a sell, but we could see that from here to here it was basically buying. So as we draw our trend line on the 4-hour time frame, we could see that, okay, we have 1-2 touches and it's moving in an upward direction, but the third one, it didn't touch, it broke. That's good, because overall we're heading for sells. Should it not have broke it, then we were gonna take short-term sells. We're taking short-term sells, short-term buys. We're taking short-term buys because overall the market, unless it breaks this overall trend line right here, that's when it would head for buys. But overall we're heading for short-term buys. Basically, like, our buys would end here, which is small profits. So I wouldn't suggest you taking small profits instead of taking long-term sell profits, right? Whereby our profits with the sell would basically be around here. Like I said, risk to reward ratio 1:3, right? So lastly, I'm going to be going on indices now. I believe, like, you get the rhythm now. So I'm going on indices. With indices, my strategy is a bit different. So on the 4-hour time frame, I still draw out the touches on the trend line. I can see it's a bearish momentum, it's a bullish momentum. So I have let me see, I have 1, 2, 3 touches, right? If you can look closely right here on the bullish momentum, sorry for my mistakes, on the bullish momentum I have 1, 2, 3 touches. You can see from here, then I have another one here, right? And then I have another one pretty much here, right? And then the market does exactly what it's supposed to do on the third touch, which is support the movement, the overall movement, right? Risk to reward would use 1, 2, 3, would be in profits by now. I won't put that up, but then again, I still drew a trend line amongst this current direction of the market, right? So overall, like I mentioned, it's a bullish momentum. We're heading up, it's an uptrend, right? But if you can see right here, I drew a trend line from here to here just so I can take this short-term sells, right? Because with NAS, I just like scalping. So I know that as soon as it breaks this uptrend trend line, my risk to reward ratio will be 1:3, and currently it's 2:44, which is okay. So as soon as it breaks, I'm going to look for those short-term sells. But then again, like I said, I prefer trading the overall direction of the market. So even though on this trend line it won't break, I am not that it won't break, but even if it doesn't break, I would still have a touch, meaning that my touch would basically be another buy trade for me. So as you can see right now, we have 1, 2, and that one is not quite clearly a touch, I can't see. But as soon as this candlestick doesn't break and just touches the trend line, I'm gonna head for more buys. But if it breaks, I'm gonna head for more sells. So I use the 4-hour time time frame on NAS 100, but normally when I enter, it's 30 minutes time frame or the 15 minutes time frame, right? You can see that it's much more clearer on the 30-minute time frame in terms of the touches, right? I have 1, 2, and then I have 3. So on the 30-minute time frame, I have a third touch, so I can basically take my trade. But it's already too late now, so it's not that late, but like I wouldn't enter because the market has already left me. So as you can see the movement right now on this candlestick, I'll just wait for it to see whether it's gonna touch or maybe if it's gonna break. But regardless, we're waiting for a 4th touch here on the candlestick, since this third one already left us. Risky traders would have entered by now, but I would have waited until I get a 4th touch because the market has simply left me. But yeah, guys, that is it for this week's market weekly breakdown. I'll see you guys next week. Just make sure you guys like analyze properly, and the description will have every details in terms of mentorship and in terms of signals, guys. So thank you guys for watching. I'll catch you guys next week, and peace.